Beer and vitamins, a natural combination really, but there's plenty in this deal to like, isn't there? There's a very healthy premium, special dividend as well. Sure. Seems likely this is going to get the tick.
Yeah, absolutely, and strong support from the founding family's key shareholder as well, who own 18%. So, you know, given the way the stock's traded over the last few years, it was a market darling back in 2016 and has had a rough ride. That family element has had a few disagreements and a bit of you know, poisonous relations with prior management, so this allows everyone to kind of take the money and go their separate ways, as well as allowing Kirin to really forge into some pretty interesting areas that are well beyond what it's normally done as well.
Yeah, so Harry, tell us a little bit more about how this deal makes sense for both sides.
Yeah, well, especially for Kirin, I mean, there's going to be a lot of attention on what this does. Other beer brewers are really, you know, sticking with their knitting and just, you know, ploughing further into alcohol. But Kirin and there's a few brands out there, not just only in alcohol, but, you know, consumer packaged goods companies are really thinking about the way that consumer tastes are changing. People are becoming a lot more health conscious, and that's probably particularly poignant for alcohol producers, where, you know, places like the WHO have put out, you know, recommendations on restrictions for marketing alcohol and some of the, you know, some of the, you know, the dangers that can provide to their business model down the track, as well as just the growth that we see in health and well-being products. So for Australia, these, you know, this is a leading kind of company in the space. For, you know, Paul and I know they're on the shelves everywhere in supermarkets and pharmacies. And so that kind of distinguishes, you know, is a new growth avenue that Kirin says they want to build out, you know, like $3.7 billion of revenue in that business area over the next decade. So they certainly see a strong future in it. And, you know, yeah, not the first mover in the space. There was a deal for Blackmore's main competitor in Australia, a brand called Swiss, which was purchased by a Hong Kong company back in 2017 as well. So, you know, but it closed it out, and we'll be interested to see what they do with the brand over the coming years. But they're certainly going hard with it.